Hey Renter Retires, it's Adam Schroeder here, and today we're going to talk about what happened last week, starting April 25th, 2022. Before we get started with today's video, let me remind everybody, please subscribe to our YouTube channel, click the notifications bell, and don't miss out on any of the material we're putting out as we try to make you the best possible real estate investor you can be, so that as you start or as you continue your real estate journey, you are set up for success. Really have enjoyed all of the time that you've been spending watching this and talking to me and talking to our other investment strategists, saying it's been helpful. It's been great. Really enjoy it. So don't forget to subscribe and not miss any more of the content. So let's get to it. What happened last week? Well, if you look at what happened, vacancy rates in the United States keep getting lower and lower. We are down to 4.6% vacancy rate in the United States. This is really low. How low is it? Well, pre-pandemic, we averaged somewhere in the 6 to 7% range. So we are down, in some cases, 25 to 30%. This is incredible. This is one of the reasons why you can't find a place to buy or rent, because people are staying in place and in their homes. So vacancy rates are very low across the United States. Also, unsurprisingly, with the rise in interest rates, we have seen a massive drop-off in the mortgage refinance applications that are coming in. It's pretty massive. How massive? 9% drop from last week and a 70.8% drop from the same time last year. Adjustable rate mortgages have been the recipient of all of this. So they have seen a tripling in mortgage applications in the last 3 months. So it's time to start looking and seeing how long you're going to hold the loan and whether or not an adjustable rate mortgage makes sense for you. You can talk with us, you can talk with your mortgage broker and decide whether that's something that you want to look into or not. If you want to look at what's going on in the US economy and why people are having so much trouble buying homes, look no further than the number of homes being sold under $300,000. Right now, that number is 14%. Last year, that number was 34%. This year, it is down to 14%. And there are even fewer new homes being built in this price range this year than there were last year. So next year, it's probably going to get worse and worse and worse. When we have investment properties in the 130 to 170 range for existing homes, and we're seeing our new constructions in places like Texas and Alabama that are under $300,000, it shows you why we're so set up for success and why they're in such high demand from renters, because these homes just don't exist out on the market. So it's a wonderful time to be buying these properties right now, because they're getting scarcer and scarcer, and people are still looking to rent those places. So whenever it comes time for you to sell, when you sell in that price range, you're going to have people jumping all over you trying to buy that house. So now let's hop over to the economic indicators from last week. Unemployment held steady at 3.6%, which is an incredibly low number still. I mean, I remember when people were saying the natural rate of unemployment was somewhere around 4%. Well, we have consistently broken through that over the past few months, and it is great to see as people are back in the workforce. So we're at 3.6% there. For the average days on market, we saw a drop down to 38 days, which was down from 47 the month before. So homes are coming, homes are going. The median sales price is at $436,700. But if you look at the average sales price, it's even more shocking. Average sales price is over $500,000 at $523,900. Now, the average rent across the United States for a 2-bedroom apartment is $2,050. This is up year over year. Not surprisingly, we have seen a continuous growth in rents, double digits in most places, and it is going to continue as we've seen the mortgage applications slow down and the number of homes being sold slow down because people are scared off by these high interest rates. Speaking of the interest rates, where are they? Well, we're just going to talk owner-occupied rates right now. Owner-occupied 30-year fixed saw a drop from 5.34% last week to 5.241% this week. Not a huge drop, but a drop. The 15-year, however, did not follow suit. Last week, it was 3.63%. This week, it is up to 4.316%. So that gap between the 30 and the 15 is getting closer and closer. And the number of the week is 1.601 million. That is the number of housing units that are currently under construction in the United States, up from 1.558 million the previous month. Now we need to be somewhere probably closer to the 2 million number in order to get this inventory problem solved, but it's nice to see even a small bump just to get up there. So that's what happened last week of April 25th, 2022. Hope you've enjoyed this video. If you've had, please click the like button, let us know. Also, don't forget to subscribe to the YouTube channel, click the notifications bell. I love whenever you tell me you watched the videos and they've been helpful. So head on over to renttoretirement.com. You can schedule a call with one of the investment strategists like myself to go over what you want to do with your real estate portfolio, how you want your journey to go, and we will help you get there. That is what we want to do. That is what we love doing. You can also see all of our inventory there, and you can see our partner companies and the people who we trust to handle what we do whenever we need help in our real estate portfolio. That's at renttoretirement.com. Really appreciate you spending the time with me today, and I'll see you on the next video.
Thanks for watching the Rent to Retirement YouTube channel. Check out some of our other videos, like this one, or this one here.